Hello and welcome to Views from the Market, Midmarket Private Equity and M&A in Canada. My name is Mario Negro, and I'm a partner in the Private Equity and M&A group at Stikeman Elliott. For today's podcast, I'd like to welcome our special guest, Mike Alberts. Mike is the principal and head of business development at Cohere Capital. Mike, thank you for joining us and welcome.
Thanks for having me, Mario.
Mike, we always start the podcast by asking our guests a little bit about themselves, and in your case, about Cohere Capital. So maybe we'll start there if that's okay with you.
Awesome. Thanks, Mario. I'll start with myself. I grew up in Tampa, Florida in the U.S., went to school in Texas, and have lived all over the U.S., really, East Coast, West Coast, middle of the country, and have spent my entire career working with growth stage founder-owned businesses, initially in investment banking at Houlihan Lokey and BB&T, investing at Gage Capital, operating at a healthcare business, and then back to private equity and investing at Cohere when I joined Nick and Daniel, the two co-founders, about 6.5 years ago. And I've been with Cohere since day zero and have known Nick and Daniel for quite a long time. On the personal front, I live in the suburbs of Boston with my lovely wife, and I'm a triathlon and endurance sports nutcase in my free time. But my day job, as you said, is leading business development for Cohere Capital. We're a lower middle market firm based in Boston, investing out of our second fund. It's a $215 million fund. And 100% of what we do is partner with founders and management teams of tech-enabled services, software, and business services companies.
You've been on the front lines on the BD front for many years. You've been active in Canada, and Cohere has looked at a lot and done deals in Canada. And obviously the last 6, 7, 8 months have been a wild time for somebody on the front lines. Tell us a little bit about what you're seeing out there on the business development front with the kind of tumultuous year we're having in M&A in 25.
Absolutely. I think that there was a lot of excitement going into the end of 2024 and the beginning of 2025. Perhaps the election in the US was behind us and deal flow would kind of get back to normal. And then we hit some speed bumps in the early part of the year, especially in April. And we've seen a bit of a dip in volume, or we did see a bit of a dip in volume in Q2 and really over the summer. But the sentiment that we're hearing across the market is that things are going to start to improve. Things I've heard lately are people are getting comfortable with the uncertainty in the market and are just going to have to make decisions. We're at record levels of dry powder on the equity front and on the credit front, with deal activity going down over the past kind of 9 months or so. So the dam's going to have to break at some point, and we're optimistic that that's going to happen soon.
Are you seeing more out there, generally speaking, Mike? Like, have you noticed an uptick the last few months, and what have you been seeing most recently in terms of deal flow?
Certainly. Because we invest in the lower middle market, we've seen a pretty consistent flow of good deals out there this year. We're not up a ton, but total deal volume has been up in just over 10% for us. But what we have seen are there are significantly more quality deals and quality opportunities in market. And so there's quite a bit of competition for those quality deals. And I would say, the broader market, what I've been hearing from other firms, both investment banks, private equity firms, and other industry participants, is that deal flow has been increasing since May. And August is always sort of a slow month, but we actually saw quite a few deals. So we do see a broader pickup in both quality and quantity.
Mike, you've been actively looking for deals in Canada for a long time. Want to get your perspective on the Canadian market and any unique elements of it or characteristics of it from your perspective as an active investor looking for deals in Canada.
Yeah, absolutely. Well, in addition to Canadians being a lot nicer than Americans, there's a lot to like about the market. I would say we do spend time in most of the major cities, Toronto, Montreal, Vancouver. Probably need to make some broader trips as well. But in general, we've seen a pretty nice volume of tech-enabled companies, across the past few years that have been popping up. And I think there's maybe, while the deals and the companies are a little bit smaller in general that we're seeing come to market, they're really nice founder-owned businesses with really interesting solutions that are both serving Canadian customers, in some cases US customers and international customers. And so we think there's a lot of promise in investing in Canadian businesses.
What's the sweet spot for Cohere? I assume it's the same for Canada and the US, but what's the type of deal you're really looking for? I don't know if there's a difference in Canada and the US, but...
Yeah, it's very much the same across Canada and the US. We're looking for businesses that are founder owned or the management team is running the business day to day and has ownership in the company, believes in the vision and wants to stay with the company. We don't have any operating partners or gray hairs waiting in the wings that we're putting into companies. We like to partner with the current team. So that's one element of it. The size range for us tends to be 2 or 3 million of EBITDA on the small end up to about 15 of EBITDA on the high end. We will look at software businesses that are slightly profitable as well, and kind of the, call it 7 plus or minus ARR at the low end range. And really what we're looking for in businesses are a strong services delivery or services solution where there's tech as part of the story, whether they're building, buying, implementing, managing, consulting, et cetera. Or there's an opportunity for us to help them drive technology through their business. And so it could be more of a people, blue collar business that could use a little bit of technology that we can help the founders and management teams build.
Like in our marketplace, we have a lot of US private equity firms, and obviously you're trying to differentiate yourself. You're trying to create a market position for yourself in a kind of crowded market, particularly in the middle market in Canada. I'm curious, what is the unique element of Cohere as a buyer for a seller? What is it that you focus on in terms of, obviously purchase price is key, but there's also the other elements of why partner with Cohere. And tell us a little bit about what your unique features are at Cohere.
Certainly. Yeah, it's not unique to have money to invest. There are a lot of great private equity firms out there that have a lot of fantastic people. I think the benefit of the industry is there's a lot of smart folks. I think a lot of firms, PE firms, say that they do partnership deals, and we actually mean it. We are only partnering with management teams. And in addition to trying to help teams, we create a bespoke value creation plan with our partners, managed by our head of value creation that we have internally. No one really knows a business better than the founders or the management team. And so we're really bringing strategic advisory to these investments. We're bringing 50 plus years of looking at 1,000 plus deals a year, working and advising on dozens of companies over our tenure. And so we're helping with things like professionalism, sales, go-to-market strategy, and then augmenting the team as needed. In a lot of these cases, you have a CEO that's wearing, 12 hats. He or she may be CEO, CTO, CFO. We want to help and build the teams so that they're able to drive that growth. And in some cases, take some chips off the table so they can make some financial decisions with a partner like us that has a checkbook.
Obviously, your role at BD, AI is a tool. We hear about how it's being used to drive kind of deal generation and deal opportunities. But then in your case, it's also heavily influential in the type of deals you look at, because they're obviously the disruption associated with the AI affects a lot of the businesses you're looking at. So can I ask two-part question if I would? How is AI influencing or part of your deal sourcing BD work? How is it getting incorporated into your work? But then also, how are you as a firm dealing with the impact of it on the investments that you make, portfolios you own, the companies you're looking at, and where it's going?
It's a great question, and I think it's on the tip of everyone's tongue at this point. Maybe I'll address the second part of the question first. As a firm, almost the number one conversation that we're having in our investment committee discussions are, how is technology in general affecting this business, but how is AI going to change this business model? Or can we harness AI to accelerate this business model? And I think what we've found is there are a lot of great ways to utilize AI that is augmenting people and the teams instead of replacing people and their teams. And so it's certainly a risk, but also a benefit. And, internally as a team to use AI, it has really a deep research function. So digging into an industry, doing research on a particular company or a competitive landscape has been super helpful, the way to be able to do that internally. And then also using it internally for efficiencies, right? We're very cautious of security and not putting proprietary data, ours or someone else's, out into a large language model. So we've been very careful to ring fence data and make sure that what we're putting in is, appropriate from a compliance perspective, but we are using it to try to streamline some of our internal operations. But I would say we're certainly at the beginning stages of harnessing it with not only ourselves at Cohere, but with the companies that we've invested in. And I think the third piece you were saying about business development, I think it is a wonderful tool to supercharge your kind of desktop research and learning about a company. You can certainly type into any of the public models, hey, I'm sitting down today for coffee with Mario. Please tell me a little bit about him. And it'll pull some information on your website. And I think that's helpful, but we're really cautious to not make AI and automation our only tool, because this really is a people business, and we're in the business of partnering with founders and building relationships with them and helping them on a day-to-day basis. And we want to make sure that face-to-face, person-to-person contact is the most important thing.
Will you look at AI businesses in terms of acquisition opportunities, or is it too early still to, the space is still evolving and more to come before you jump in on the kind of full AI business model?
We certainly would. I think a number of our portfolio companies have AI tools internally that they're using, whether it be a part of their software solution or a part of their service delivery. And so we're certainly not shying away from it. It is definitely an area of interest.
We've talked a bit about the year that we've had so far, and it's been a very up and down year with a lot that's happened in the last 8 months. And I always ask our guests their perspective on the year ahead, or what they see coming, or what's coming down the line. We call it the crystal ball question. I wanted to do that with you. What's your perspective on the year ahead? I mean, obviously, tariffs have been a big part of the conversation so far, maybe the word for 2025. What do you see coming from a deal perspective, both from a sense of opportunities and just in terms of getting deals done?
I think we're reaching a point in our industry where, at least on private equity backed or venture capital backed businesses, we've seen extended hold cycles, right? So there's businesses that are being owned for longer than they normally would be owned for. And at some point there need to be realizations. And so I think that dam is certainly going to break, if it's not in the next quarter, maybe in the next couple of quarters. So that's going to certainly drive deal flow. Again, on the tariff issue, I think people are getting a bit more comfortable with the uncertainty that we're going to have in the market. And there is a lot of positive momentum and positive talk out there about what we're going to see perhaps in rates as well. And there's just too much dry powder out there for people to sit on the sidelines. And so I think we'll continue to see the competition in deals that are really high quality deals, which we're seeing right now. But we're going to start to see some of those B assets coming to market and getting a lot of competition as well. So whether I'm willing it to happen by talking about it or it's actually going to happen, I do hope the crystal ball increases deal flow for the rest of the year. So we're excited about the back half of the year, and we're willing it to be positive.
Mike, when you look at the next 6 to 12 months and you kind of see the U.S. economy and where things are at, are you seeing any trends that we should be aware of as we look to kind of deal making in the rest of 25, 26 that are, you're out there on the BD front every day. Anything you're starting to see we should keep an eye on in terms of future trends?
Yeah, it's a good question. I think something that we've already talked about is just how technology and AI is going to affect every industry. Even old economy businesses, you need to be leveraging technology in some capacity. I think there has been a lot of investment into software over the years, and AI is shaking that up. But there also is a bit of a worry across, I think, the market, where folks think that AI is going to take over jobs tomorrow. And that's just not the case. And I think it's, again, going to be an augment and an additive to people-based businesses. But even in the tech sense, it may shake up a business model, but it's not going to make one go away. So I would look to see how AI is going to change the investing landscape again, even in that sort of tech-enabled market.
Mike, I want to thank you for being our guest. We appreciate learning about you, learning about Cohere and kind of what Cohere is doing. And hopefully we're going to see more of you in Canada. We appreciate having USP funds doing deals in Canada. So thank you.
Well, thank you, Mario. And we wouldn't be able to do deals in Canada without you. So thanks so much for having me on and for your time and for working together.
Thank you for tuning in to Views from the Market. Stay updated with the latest episodes by subscribing wherever you find your podcasts or visiting stikeman.com/viewsfromthemarket.